Great. So it's my honor to look after the graveyard shift. So we're going to try and make it very, very exciting. I'm going to ask some difficult questions. I've been told on the pain of terrible torture that we have to keep it in 20 minutes. So let's get into the meat of it. Look, the point about this panel was how are hedge funds now getting exposed to or trading virtual and crypto assets. And it is increasing quite a lot now, but let's ask the panelists to give a quick introduction to themselves and their views on the market for hedge funds and virtual crypto assets. Shall we start with you, Gaurav?
Hi guys, I'm Gaurav Dubey from Trade Dog Group. We are a crypto specialty group with a whole bunch of companies that specialize in specialized operations like incubation and advisory of startups and scale-ups under a certain brand. And then we have market makers and market manager under a different brand called TDMM. We have a launchpad and social community engagement platform that has a few 100,000 users under TDX. So that's largely us. All we do under Trade Dog Group is full-time crypto.
Hello everyone. My name is Alex. I'm the general manager of Binance here in Dubai, Binance FZE. So that's a regulated exchange. If you're not aware of Binance, it's the largest crypto exchange in the world by quite some value. And what we're trying to do is we're trying to move towards more traditional markets by offering the same sort of environment that you're used to in other exchanges or other venues. So, you know, there's been a lot of problems with governance, which we're trying to correct. There's been problems with the products and the services, before a little bit more experimental, but now, you know, the traditional financial markets are coming in. Crypto is quite attractive to hedge funds because it's volatile, so it leaves you lots of opportunities to be right or wrong. Yeah, we're looking to grow it in the Middle East because it's an attractive place to establish crypto businesses.
Hi everyone, I'm Julian Sparring-Toy. I'm the Chief Development Officer for a new second generation crypto coin called Unicoin.
Sorry. So I'm Ryan Taylor. I'm the Group Head of Compliance for Brevin Howard. I'm the CAO for our Brevin Howard digital business, which focuses on crypto assets. I moved to Abu Dhabi in April of this year. Brevin Howard moved to Abu Dhabi in February of this year. We're a global macro hedge fund. We run about $33 billion globally in numerous different jurisdictions. I think it's that one. In numerous different jurisdictions under numerous different regulatory banners. We are running digital assets in the ADGM. Our digital asset business is close to $1 billion, so it's by no means the most important part of our business, but it's certainly, from our perspective, an important part of the business. We view that as a new macro asset class. As a consequence of that, given we're a macro asset manager, we feel we need to participate in this asset class, and we have been doing so for close to 2 years now. We run a multi-strategy digital asset fund which invests in VC, long directional coins, and also does relative value trading utilizing digital assets as well.
Craig?
So my name is Craig, the Chief Operating Officer of MidChains. We are a regulated custodian in MTF, which is a multilateral trading facility, ultimately a centralized order book regulated in the ADGM by the FSRA. Really, MidChains' vision about 3-4 years ago was to put itself in a position when hedge funds and institutions were to come online to be able to start diversifying into the crypto industry, to have a platform that was regulated, that had the proper policies and procedures, so that those types of institutions, hedge funds, would look to our venue and our platform to be able to invest and diversify in a safe manner. And I think you look at the landscape and what's happening in the US right now, you have no regulatory certainty. And there's a lot of studies that say because of that, around 23% of the hedge funds are reassessing their crypto strategy, their trading strategy in digital assets. And about 12% are looking to relocate. And so our view is that there's a perfect storm happening within the UAE because you've got regulatory certainty from a framework standpoint, and you've also got the platform. So if you're a hedge fund, whether traditional, thinking about diversifying into digital asset space or a crypto hedge fund, it's a proper jurisdiction to do so.
Thank you for that. So once you heard that Ryan mentioned that they are looking at virtual assets as perhaps a grown-up asset class, if I may. But let me just unpack that a bit more, because for this particular asset class to become further accepted by hedge funds, I think the grown-up support infrastructure or the support infrastructure needs to grow up. Now, on this particular panel, we have got exchanges, we have got issuance of coins, we have Gaurav, who's obviously been looking at quite a lot of the infrastructure pieces. I've got certain fingers in the pie when it comes to funds which are doing this, as well as supporting pieces. The key thing that comes up is unless we further institutionalize and standardize and make it much more easier for funds to transact in this particular asset class, it's going to face issues. So let me ask each of you, and I'm going to start with you, Craig. You talked about the regulation, and we'll come to that at a later point. But talk to us about the plumbing, as you would see in equities or commodities or fixed income, which still need to be fixed when it comes to crypto and virtual assets.
Yeah, I mean, the biggest issue that's still in the space, and it goes back to the U.S., and I think I can trash the U.S. a little bit, being a native from the U.S., but it comes down to the banking sector as well, right? So the U.S. banks still have significant influence internationally when it comes to even fully regulated firms in other jurisdictions trying to be able to transact or accept client funds. And so I think that will have a knock-on effect even when it comes to hedge funds or digital asset hedge funds that are looking to continue to diversify into the space, because there's still correspondent banking issues. And the correspondent banks are predominantly U.S. banks. And so until the U.S. gets their act together when it comes to the banking and the regulatory frameworks, I think there's still headwind, and that would, in my opinion, be one of the biggest plumbing issues, because you do have jurisdictions that are regulating the industry. You do have proper frameworks that are in place to be able to get regulated and operate in a prudent manner. But you still have the issue of banking. That's the biggest plumbing that I think needs to be fixed.
Alex, what do you think from your perspective?
The technology, the trading technology is identical to other platforms. There's fixed connection, there's WebSockets, there's REST, so there's no problem with that. The real issue is cryptocurrency is peer-to-peer, or has that peer-to-peer attribute. And that's what unsettles traditional finance, that's what unsettles custodians. It adds complexity to custody. Do funds custody their own stuff? Do they have the technical competency? Are they sophisticated enough to do it? That's the question that everyone's really asking. I mean, it comes down to the banking, because the US hold the key to collateral. But when institutions, hedge funds, big entities that become comfortable with how to deal with the collateral, then the questions are answered, right? We're talking about borderless financial services here, where you can send stuff to India without having to deal with the governments, which does unsettle them. But we're moving to a global industry, and I think we just need to prepare for that.
You talked about entertaining. Can I chip in?
Let me just come back to you. Julian, obviously you're talking about a coin, and both you're talking about the primary issuance and the secondary issuance. and secondary trading is where the hedge funds roam. Talk to us about your perspective about what plumbing fixes would you like to see?
Well, I'm interested to be honest, in what Craig was saying about the banking regulatory environment in the US and how critical that is. And I guess it comes down to the political will, right? And where we are. I mean, the current US regulatory environment that came out of the GFC sort of 13 years ago seems to have just like hit a brick wall, really. And from my perspective and from our perspective of what we're trying to do with Unicoin, you're absolutely right. It's what happens in the US, as the old saying goes, the US sneezes and the world catches a cold, right? So in terms of that political will, and to your point about creating this global environment of where funds can be transferred, where are we with that in your opinion, Craig?
And I can't speak for the U.S., but it doesn't seem like we're making too much progress.
Yeah.
At this point. But I mean, isn't this also the reason why digital assets, Bitcoin, was started in the first place, right?
Yeah, it's the classic central versus decentralized argument,
Correct.
Isn't it? Yeah,
Correct.
And how you square that particular circle in the current environment.
Correct. But you don't see much progress, right? You do see different rulings that are coming out, from the SEC, but there's still a lot of headwind to fight, and no certainty or no stance is worse than even a bad stance. Yeah. So just make a stance so that institutions, platforms can understand where they need to navigate to continue to grow their business.
There is a worse stance. The worst stance is having a stance through enforcement.
Sure.
Correct.
Which is what we're in a situation at the moment. There's no clarity in relation to US regulations. Yeah. It's become a political issue. The Democrats are one way, the Republicans are another way, just like everything else in America. And firms, many firms, are in the crosshairs in relation to that, mentioning no names on the panel. But it's unfortunate for firms who actually do want to do the right thing, because you've got Coinbase and other people, so let's talk about somebody who's not in the room. And they've tried to meet every regulatory obligation in order to be able to run a business appropriately in the US, and they can't do it because the regulations don't allow them to do it. So it's a perverse scenario which firms find themselves in, and I do think you're right. There is a massive headwind in the States, and once that headwind abates and even potentially turns into a tailwind, and it'll be transformational for the asset class. By the way, people hate crypto being called an asset class because it's so diverse and there's so many different aspects associated with it. So allow me just to do that for shorthand's sake for the purposes of the panel. Otherwise, we could be here all day.
Well, whilst you're speaking, I was going to keep you till the last, but any other plumbing issues that you would like to see fixed?
Yeah, look, crypto's hard. Unless you're good at technology and you can set up your own MetaMask, et cetera, and the vast majority of people don't know how to do that. And even if you do know how to do that, you can still get it wrong and still lose your assets and everything else, because the thing about crypto is it's immutable. If you lost your assets, you've lost your assets. You're not phoning up your custodian and saying, can you give them back? If you've sent them to the wrong wallet, they're gone. So it's important that and this is the reason why we have a Brevin Howard digital division within our hedge fund, because you need people who are specialists in relation to what they do. If they're not specialists, they don't understand what they're doing in relation to the market, because of its complexity, you will get it wrong. You will lose assets. You will get burnt. You'll choose the wrong custodian. You'll choose the wrong exchange. And there's a ton of credit risk associated with crypto, as well as we saw with FTX and the collapse associated with that. Really, for the asset class to be truly grown up, you either need to, well, until it is, then you need to come to people like the people on the panel here who can help you and can manage your risk for you appropriately. But really, in order for the asset class to become truly adult, for want of a better term, then you do need appropriate regulation. You do need the exchanges to be separated from the custodians. You do need the custodian to be independently owned. You can't have commingling of funds. Traditional finance has its issues and has done for many, many years, but some things it's got right. And the vast majority of historical regulation was dealing with conflicts of interest. The crypto markets are rife with conflicts of interest. And until the regulations sort that out, the crypto participant, you've got players like us who are institutional, who are trying to do that, and you've got other players on the stage here who are also trying to do it. But you've got to remember the vast majority of crypto is still retail. Retail investors are not going to sort this out because they think that they benefit from it, but they don't. And as a consequence of that, for the asset class to really grow up, you do need to start having sensible regulation in all jurisdictions, removing those conflicts of interest or managing those conflicts of interest, but do it through clear rules rather than through enforcement, because there are participants who want to do the right thing, but simply can't because the regulation is not there.
Fair point. Gaurav.
Yeah, I've been on this stage for fifth time with you, Bhaskar, I guess. So I don't want to cover everything else. And I only probably agree the most here with Ryan, because it seems that they're deploying as a hedge fund. I've been operating a fully featured hedge fund, of course, of private capital, and I've deployed already above 100 million by 2018. And I must tell you, my problem was not at all on-ramping. Yes, India was not the best place to do it, so I did it in Seychelles. I did it in BVI. I had a structure from Cayman, sorted, right? Onboarding happened from US, it happened from Kraken in UK, and it happened from Lithuania, Liechtenstein, Gibraltar, wherever, right? So these were not my first problems. My first problem is actually, and sorry, Alex is a very dear friend, and mid-chain founders are dear friend, but I'm going to pose a question here. I never found fixed APIs. The first 20 million I deployed on the largest futures exchange, BitMEX, I was literally being throttled on my account. I went out, and I was talking about this to somebody here. I actually created an infrastructure, a cheat infrastructure, of 100 accounts, pseudo accounts around the world, to look into the real order book. I'm sorry, I'm getting in technical, but I think as a hedge fund, I don't go in and out every day. Yes, on the days of reporting I do, but that's probably once a year as an international hedge fund, right? Probably I do less because it's private capital. So I'm talking about a baseline problem. If you want to deploy a $10 million order, you don't really have access to the true order books of the largest futures exchange. I know it's not the best exchange to quote, we have better exchanges, but we still don't have fix, which means we still don't have like the baseline standardization of trading. Quite often than not, we end up having this discussion, why don't we have fix? Why aren't exchanges adopting a certain standard of standardization that is well adopted around the world in an industry that has already solved itself, right? Why isn't Binance talking to OKX? Why isn't they all talking to, mid-chains? So that's the first, I think, the first turn off for a good quant firm, and of course traders. Then from there onwards, I would say, because everything else has been covered, I'm not saying this is my priority of the most biggest issues, because others have been covered already. Liquidity, of course. Right now, you have, I think, less than 2% of Bitcoins trading, something like that, Alex. I mean, if somebody jumps in and buys in $1 billion worth of Ethereum, that happened, I think, last week, almost half of the market turns dry. Right, which is, I don't think, a big problem, but that's the second plummeting issue, and then of course everything else.
Look, sorry, but I mean, 100% agree with you, and it's interesting because effectively, what the crypto market has shrunk to a quarter of its former self, and that's always going to have an impact upon liquidity. But you're right. Having standardization, no criticism for any of the players again on the stage, but it's not in their interest necessarily to have a common infrastructure, because then it's easy to port assets and everything else, and then liquidity can move to different markets and everything.
Like I said, they're my friends, and of course they're incredible businesses. I'm just talking in general about the plummeting of the industry.
Yeah.
I'm just saying what can be done better. This can be done better. I'd be more confident to, of course, a player like me that has been doing it institutionally since 2015, I am in a stage where I can actually go and dive deeper into the bottom, something beyond top 200, top 100, with above like 20 million capital, which is actually too much for anything beyond 200. But I won't do it because I don't want to name the exchange, but the exchange that is hosting that asset does not provide me the confidence in its infrastructure. Their hooks fail like 3,000 times an hour.
If I may, just one more thing from a different perspective. You are just hearing what the issues that hedge funds who are interested to or are investing in crypto are facing while executing. Looking at it from the boring old git perspective, when it comes to the IC or to the board, I don't get this. I don't get these problems because I have grown up with this traditional asset class where all these things, you are talking about fix. I used to work in Solomon Brothers where fix was fine. Fidelity, and we are talking about last century. They fixed a problem. And when it comes to the board, I say no because I'm not getting the right answers. You are seriously telling me we are going to deploy investor money into funds, which you are just waffling on about, and you're talking about technology where we're talking two different languages.
But I agree, but the important thing is, and I was just re-looking at the title, so potential areas for growth and innovation, and we've just been criticizing. If we go back to the first principles associated with this, so people get confused and conflate issues. So if you think about the technology of blockchain, that is fundamentally transformational. And the value which will be unlocked in relation to that is mind-boggling. It's so huge. And you just need to get it right. And then the entire thing opens up like a flower and everybody will be very, very happy. And those who have participated in it from an early stage will also be very, very rich. But society as well should be better off because there is a better way, utilizing the blockchain is a better way of doing things. So what annoys me, and we haven't done it here because there's too many technicians on the panel, myself unfortunately included, but you start talking about crypto and everybody goes, oh, Bitcoin. It just so annoys me because that is a tiny, it's the largest token, but it's a tiny piece of what blockchain is. And people even, when they're talking about tokens, then they conflate that with blockchain. It is fundamentally different. And the value attributed in relation to all of this is going to be absolutely awesomely huge. And looking at the potential areas for growth, that is it. And blockchain, by definition, is innovation. If we can get the blockchain and the technology associated with it more ingrained into everything we do, the world is better off, it's a better trusted place and everything else, and as I say, the values are going to be enormous.
But that's the key problem, isn't it? There's an absolute lack of understanding of what the real power of blockchain is and how it can be transformative for economies, for businesses, for the financial networks and all that kind of thing. I think, as you say, quite rightly say, that is the area of growth for hedge funds and how that is transformative for the performance of their product.
I'm conscious of the time, and now let me address this question to Alex. Every one of you talked about regulations. And of course, here in the UAE and in Bahrain will perhaps be the two countries where the regulations is perhaps the most advanced. And I'm not saying just because I'm coming from here, but this is what I actually see. Now, Alex, for example, you are obviously authorized in both locations. Give us some sense as to what you are seeing when you are talking to the regulators here and in Bahrain, and I know you have a privileged position. What's good? What do you think?
I'll be mindful that some of the regulators are here from Bahrain, but the compliance officer is also behind them. So in Bahrain, I'll address quickly. I don't spend too much time dealing with it, but the beauty of the system there is they have one regulator, so all FIs are regulated by the same institution, and so there's transparency with the regulator and the FIs about how to deal with crypto. We've talked about other markets where the regulators don't talk and they have commodity regulators and security regulators and banking regulators. And obviously everyone has an ego and that doesn't really work for this, especially because it's innovative, it's growing, and everyone can see that it's future revenues. So Bahrain has that, and that's a real plus for them. In Dubai, we have VARA, which is virtual asset specific. So that has another advantage that the regulators are just looking at virtual assets. Like Ryan said, you need to concentrate on this asset class. It is technically difficult to understand how everything works. And if it's something you do 20% of your time, you're not going to be dedicated enough to make smart decisions. So having a virtual asset specific regulator makes it a lot easier, especially for virtual asset companies such as ourselves, to talk to the regulators and really have them sort of understand the nuances of what we're talking about. I mean, the last point sort of comes from this and what Ryan was saying. The asset class is very diverse, right? So, you know, again, the traditional viewpoint is segregated to different types of asset. I mean, I think we have about 4 or 5 types of asset class, main asset class, and it's diverging now. So we've got like compute assets like Ethereum, we've got like store of value assets like Bitcoin, we have asset-backed tokens, which can be done, and we have utility tokens. So other things where, you know, you're buying into that ecosystem. So it's like a VC play, but it's not quite as real world.
Gaurav, you rattled off quite a lot of jurisdictions that you have played around with. Tell me about your views about Bahrain and UAE when it comes to running a fund in this area.
Unfortunately, I haven't had my fund just because you didn't give me an appointment for the last 2 years. And I'm better off doing it from Caymans. But nonetheless, from what I've seen, a bunch of my portfolio companies happen to be, you know, the first fractional real estate tokenization fund from DIFC, even companies. So it's been such a streamlined, such a it was like I was talking to somebody who understands crypto inside out. So getting through the nuances of, let's say, tokenization, you know, banking around that, transfers, how would the real world asset peg itself to the token? I'm sorry, I'm not picking up traditional crypto because that's not my experience here. Was insane. Actually, the first company we pitched, I think 18 months ago, had a triple token model, a utility, a stable coin, and a real world asset token. And I was not expecting anyone to understand that. How would this ecosystem work cohesively? I'm sorry, it's an elaborated topic, but like they were immediately able to point out that the stable coin wouldn't work with this legal structure, and then if you can actually eliminate the utility token, you can actually get the license in a month. And that comment itself was mind-blowing. Like their understanding of the concepts were great. And this is DIFC, which was not even at the frontier of legalizing everything. You know, the DMCC was far off doing better, and ADGM had already dealt with like a dozen blockchain and blockchain type exchanges.
Right. What do you think about from the coin perspective and regulations, issuance? Alex, Julian, sorry.
I think it's critically important. I think that we're not going to find the next generation of investors in cryptocurrency, to the point Ryan made, without strong regulation. You know, maybe the enforcement point is also critical, but without regulation, without a very firm set of rules, guidelines that people want to follow, I don't think we're going to find that taking it to the next level. And to the point that was made earlier about, the political will in the US to also help that along its way, I think that's, again, absolutely critical. We're not going to get the unleash the potential and the power of the technology and of the blockchain in particular without it. It's critical.
Craig? Your thoughts about the local regulation? I know you're locally regulated.
Yeah, absolutely. No, I think, what you see here in the region is a really forward-looking, body of jurisdictions, right? So you've got the free zones here within the UAE. You've also even got the onshore regulations, all of which are unifying to some extent and forward-looking to attract the appropriate businesses here and to be ultimately future-proof, right? So for me, it's a very exciting time to be in the region and to experience that, because I've been in the digital asset space for about 7 years now and was operating a platform when it was, there was no regulatory frameworks in the UAE. So I've seen it come a long way. And I think it's only going to be helpful for the region to continue to drive its vision and growth.
Ryan, your last views on regulation. I know you're pottering around with quite a lot of local regulators.
So I almost lost the will to live when I realized I had more regulators overseeing my business than I had fingers. Thankfully, it's not quite both fingers and toes, but there's a hell of a lot of them, including some of the world's largest regulators, because we're a global business. We're the US, the UK, Singapore, Hong Kong. I'm not going to mention any particular regulator by name because you never know if they're in the room. What I will say is that I love the ADGM. Hope somebody is in the room on that basis. But honestly, I've never seen a more unified and efficient but rigorous structure in my life. The combination of the ADGM with the FSRA and the registry department and everything else. So we, small anecdote, we set up from first concept to going live, not in principal approval or anything else, but to go live in less than 2 months. I've never seen that anywhere else in the world. If it was a fifth of that time, or 5 times that time elsewhere, you'd normally be happy. But the point is they knew our business. And they realized that we were both doing TradFi and digital assets. And TradFi was the vast majority of our business, but digital assets are an important part of our business. And as Guru said, talking to a regulator who actually understands it, it's so nice. But, honestly, it's just like, it's a phenomenal experience. And I think the UAE as a whole has nailed crypto assets, but I have to talk more about the ADGM because that's where we're predominantly based. And their setup, particularly in relation to asset management of both TradFi and digital assets, it's a phenomenal setup. Very robust, very hard, but efficient. So you send in a communication, and those of you who aren't regulators or compliance officers or whatever, you won't understand the pain of this. But you send in documents or a response, and you get an answer back the next day rather than 2 months' time. And the response you get back is informed and relevant, and then you go back the next day. And I used to do this for other regulators, like, brilliant, that's off my desk for 2 months. No, they come back the next day, and then you have to go back the next day. And it's just the education, the level of efficiency, but as I say, the robustness in relation to the ADGM in particular and the FSRA in particular, I've never seen anything like it.
So let me just try and close this. You heard from people who are actually heavy into the institutional side of supporting or running hedge funds, either through private capital or wider. And that is where potential area of growth is. Everything hasn't been fixed, but if there is a place where has got the highest probability of it getting fixed and allowing you to make money and grow, it's in these jurisdictions. So big thank you to all my panelists. Difficult subject. Thank you very much indeed.
Thank you.